Aotearoa, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news of zero progress in the mess in the Middle East. In fact, it's probably gotten worse. And in the week ahead, geopolitical developments will likely dictate global market directions. Reports by the IEA and OPEC this week will reveal how the institutions see the supply shock of seaborne energy in the Persian Gulf. The spotlight on US economic data will be on consumer inflation for February. That's coming on Thursday, and PCE for January, which will come out on Saturday. Both are expected to rise, CPI to 2.5%, PCE to 2.9%. But everyone will know that this is the base on which the March data, which will be released on April 11th, will be built on. Where US inflation goes, the bond market goes, and the cost of money locally. Of course, we'll be tracking that for you. In China, they'll release February inflation data with headline CPI expected to firm to 0.8% from 0.2%, while producer prices are likely to decline at a slightly slower pace of 1.1%. They'll also release new yuan loans data, which is expected to decline in February, partly reflecting seasonal weakness linked to the Lunar New Year holidays. In Japan, we'll get updated machine tool orders results. In Australia, it'll be all about consumer and business confidence, consumer inflation expectations as well. In India, it'll be all about CPI data. Locally, apart from some retail data about card use and more analysis on mortgage activity, data releases will be relatively quiet this week. But there'll be plenty of news to follow, especially following the consequences of the shrinking workforces in the US, which will have global implications. The US economy shed 92,000 jobs in February at the headline level, the most in 4 months, following a downwardly revised 126,000 rise in January, and much worse than the forecast of a 59,000 gain. From a year ago, payrolls are up 129,000, and that is unusually low. Apart from December's tiny 59,000 year-on-year gain, you have to go back to the pandemic and Trump won to find as weak a rise year-on-year. It gets worse by broadening the view of all employment, not just payroll employment. That broader view shows overall employment down 391,000 in February from a year ago, the second consecutive shrinkage. US retail sales inched lower by 0.2% in January from December, slightly less than the expected dip though. It was the first decline since October. From a year ago, they're 3.1% higher. Most of that, of course, is accounted by 2.5% CPI core inflation. US inflation may be about to get a shock though. Petrol pump prices are up by 10% today from a year ago, up 18% from a month ago. And these costs are only just getting started, with US crude up 35% in a week, up the same in a year. When US March CPI is reported, the Fed won't be able to look away. They're facing fast weakening labour markets and fast rising inflation. They have a dual mandate, so they have to choose what to prioritise. The simple fact is that inflation problems are harder to remedy using monetary policy tools than in the labour market. Absent political pressure, they would want to fight inflation first. If they choose the other goal, they will embed inflation for a very long time. In Canada, their widely watched Ivy PMI surged higher in February, a strong expansion signal to its best since September 2025, and prior to that, its best since July 2024. In the Persian Gulf, the Qatari oil minister said in the next few days they'll have to decide whether to declare force majeure, releasing them from obligations to deliver supplies to customers. He said that could drive crude prices to $150 a barrel. There are still no ships transiting the Straits of Hormuz, except Iran-linked ones. And China's foreign exchange reserves rose to $3.4 trillion in February, a small $30 billion increase over the previous month, and the seventh consecutive monthly gain. These are now back to their highest level since November 2015. US dollar weakness helped, but it is clear US efforts to contain China aren't working at the most fundamental level. Meanwhile, China brought slightly more gold and now have 74.2 million troy ounces. American missteps have juiced the price of gold, of course, so the value of their holdings rose $20 billion to $388 billion at the end of February, now at 11% of their total reserves. After falling consistently since August, the FAO Food Price Index rose in February, basically tracking similar levels for the start of 2025. But there is wide variations between categories. Meat prices are steady, dairy prices are falling, as is sugar. Dairy prices are now at their lowest level since the start of 2024, but vegetable oils are rising and fast, with cereal prices turning higher too. Meanwhile, metals prices are rising, led by aluminium's overnight jump, and is now approaching its heady heights of the pandemic peaks. Copper and zinc have been recently rising too, even nickel. Sulfur is another essential commodity at its peak, even higher than the pandemic levels. This is a particular problem for China. But iron ore prices are not joining the party. The US Treasury 10-year yield is now just on 4.13%, up 2 basis points from Saturday. And the price of gold will start today up $28 from Saturday at $5,172 an ounce. American oil prices are up $1 at just under $91 a barrel, while the international Brent price is up a bit less, now just on $92.50 a barrel. And the Kiwi dollar is unchanged against the US dollar from Saturday, still just on 59 US cents. Against the Aussie, we're down 10 basis points at 84 Australian cents. We're up 10 basis points against the yen. Against the euro, we're up 10 basis points at 50.9 euro cents. That all means our trade-weighted index starts today little changed at just over 62.7. And the Bitcoin price starts today at $66,882 and down 2% from Saturday. Volatility of the past 24 hours has been moderate at just on plus or minus 2.5%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.